medium of exchange where if you live all the way in Korea and I'm trying to send you some kind of money and none of the apps that I normally use isn't working, I'd go ahead and just ask you for your wallet address and I just send you Bitcoin there. Well, Bitcoin turned into something more than that original use case it was created for. This is because when Bitcoin was first created, it had a free market ideology in mind, which simply means that the supply and demand of Bitcoin could be represented by sellers and buyers. So in the lines of the Bitcoin code, the supply of Bitcoin was hard capped at 21 million units, meaning that the world's government and banks cannot just print more of it and inflate its value. The reason why this is important is because with Bitcoin having a finite supply, as long as demand goes up, the value of Bitcoin would also increase.
Yeah, I got you, bro. Yeah, it's happened to me. It's clouds. Yeah, I got you. Hold on, let me see. Oh, I think I know which one you're looking at. Okay, I'm about to send it. Send. So, boom. 2.1. All right, you should have about 50 cents your way. I think it should be good, right? Was it Motion Cat? Was it that one? Yeah, dude. It's a little down now, bro, but yeah, you should be straight now. Fuck yeah, you're good. Fuck yeah. I was looking at it, dude. I didn't. I was like a little skeptical. I didn't go in. Damn, bro, that's a good entry. Me too, bro. I've been betting with small amounts, dude. I'm about ready to start upping my bets. Start making some real profit. True. And then you just leave an initials, and the initials is big enough to be an actual moon bag. Fuck yeah. Nah, you're good, bro. I literally just hopped on. Is it? Is it Discord or Telegram? Oh shit! You mind shooting me the invite? Fuck yeah! Community takeovers. Okay, I haven't been a part of one. I mean, I probably have, just like indirectly, not knowing. That happens though. bit. Yeah, dude, I was pretty confident in Scoot Dog, bro, and I still bet like the normal amount I normally bet, even if I wasn't confident. And then it went to 100%, and the bag wasn't shit. And I was like, all right, I need I need to start doing something new, change things up. Yeah, bro, it definitely did. Damn, that 40K level would have been a good entry. I feel like. Yeah. I mean, at least to get out at 50, bro, quick. Fuck, bro. I haven't made a place in Scoot Dog, man. I need to find some. It was like 2 days ago. You King of the Hill sniffer? Oh, I wanted to run one of the Mev plays, but I didn't do it. That shit's up to like 20 something mil from the 9 mil one to 23 mil. It's been running for about an hour and something. Hour and 30. I wanted to, but I didn't. I was like, yeah, I just been a bitch lately, bro. I don't know. What's crazy is that, yeah, it seems too easy, right? Damn, 37K. Let's see. I'm gonna sell. I bought in to Motion. I want to see if it retests the EMA, and I can sell for a little profit. That's a profit. That's a profit. Not much. 8%. Get the fuck out of here. It touched EMA, so I sold. Fuck it. 8% isn't shit. You made what 90% on that play? That's sexy.
Increase. This is also a way that Bitcoin would protect itself from having an inflationary value. If we compare Bitcoin to even the US dollar is obviously extremely inflationary because they can go ahead and print it and they can make as many US dollars as they want and everything else becomes more expensive. Bitcoin is the opposite of that. You cannot print more Bitcoin. There is a finite supply. And because of this, Bitcoin's purpose went from being a medium of exchange currency to then having the narrative of becoming a store of value, similar to what we see gold as. Now, by definition, a store of value is a form of investment that's going to hold its value without depreciating. Because we know in the world there's a finite amount of gold, if there is demand and value and more people decide they want to buy gold, obviously the price of gold will continue to go up. Now, one thing's for certain though, Bitcoin has been pretty volatile for most investors to believe it can actually be used as a store of value, and instead it's been seen as an alternative investment. So as an example, the price of gold, it's been going up steadily. On the other hand, if you were to buy Bitcoin in October of 2010, when it was sitting at just 10 cents and you put in $100, you would have been able to buy 1,000 Bitcoins. At the previous all-time high price of Bitcoin, those 1,000 Bitcoins that you had bought back then, fast forward at the all-time price that we saw about a few years ago, would would be worth more than 73 million bucks. It's because of historic price action of Bitcoin growing as much as it did, people are now investing into Bitcoin with the sole intention of trying to make as much money as possible. Along that journey came altcoins, which are just any cryptocurrencies that are alternative of Bitcoin. What happened was Bitcoin was clearly successful. There was clear public demand, companies starting to buy in, people investing early on, and other project developers who saw the potential of Bitcoin wanted to use the same blockchain technology to create other coins they could use to provide value. Now, because Bitcoin was the first crypto ever created with a very particular use case, there was still a lot of limitations and features that could have been improved upon. For example, if you want to actually send your Bitcoin, you're going to have to pay a high transaction fee, and it could take anywhere from a couple minutes to even a couple hours, depending on how congested the network is. As we discovered more about Bitcoin and its drawbacks, developers began creating other altcoins in an attempt to improve upon Bitcoin's technology. Now, just like your favorite ice cream, altcoins came in a variety of different flavors too. Some altcoins focused on being extremely fast, where you could send money to someone in the blink of an eye with a transaction fee of less than a cent. We saw the creation of other things like stable coins, which peg their value one-to-one to fiat currency. So if you want anything as similar to the US dollar or whatever native currency you use, that $1 stays $1 even when it's in the crypto world. In the last few years, meme coins have gained popularity. Some of the ones that you might have heard about are Dogecoin, Pepe Coin, even Shiba Inu. A lot of these cryptocurrencies were initially created as a joke, but similar to the origins of Bitcoin, people saw a use case outside of what it was intended for. And when the idea of you being able to make millions of dollars from just buying it early was happening to real people all around the world, meme coins became its own legitimate category within the altcoin umbrella. We also have utility coins that serve a variety of different functions and try to solve specific problems. Out of all the different categories that we just labeled, the second most popular utility coin is Ethereum. So imagine this: if Bitcoin is similar to gold, where gold is valuable, it's scarce, yet it doesn't have a lot of use cases outside of being a store of value and being worn as jewelry for some people, then I'd consider Ethereum to be more like electricity. Electricity is valuable because it's incredibly useful. The entire world runs on electricity and we need it to operate. In the crypto world, Ethereum is considered a lot like electricity because its long-term value comes from the utility it provides. Now, Ethereum is also what we call a layer 1 blockchain. Now, layers can get a bit more technical and complex, so I'm not going to go into the full technicalities and details of it, but let's just keep it simple and think of this as an onion. All right, so say we got an onion. Just like the innermost layer of an onion, the layer 1 is the core of any blockchain network. This here is the fundamental layer that forms the base foundation of the blockchain. So for example, Bitcoin and Ethereum, they're going to be your layer 1 networks. Both Bitcoin and Ethereum provide the main structure for the network, including the ledger of transactions and then the mechanism that validates and records those transactions on the blockchain network. Now, this layer here is crucial because it prioritizes security and decentralization. Moving outward in the onion, layer 2 solutions are built on top of the layer 1 networks to enhance their functionality. So just like how additional layers of an onion add more bulk and protection to the core, layer 2 solutions aim to improve then scalability, speed, and cost efficiency of transactions without having to adjust or mess around with that initial robust first base layer. So layer 2s handle transactions off the main blockchain, but ultimately still settle on it. Layer 2s include projects like Polygon, Arbitrum, Optimism, Mantle, and my favorite network and what I'm most bullish on, Base Network. Now, at the outer layer of the blockchain, we now have your layer 3 projects. Layer 3 is focused on specific application functionalities. So we have layer 1s, layer 2s improve upon what layer 1s are doing, and layer 3s are improving upon what layer 2s are doing. It's at this stage we see decentralized apps, different smart contracts, and even more complex protocols that have those specific use cases like finance, gaming, or even social networks. Now, each of these layers work in coordination, much like how each layer of an onion contributes to the whole, enhancing the structure and functionality of the blockchain ecosystem. Out of all of that, there's even what we call a layer 0. This here is another physical layer to support some of the other layers that we just spoke about. Now, between those different layers, you're gonna have a ton of different cryptos in separate categories that you can invest in. You'll most likely come across tens of thousands of different altcoins in the market, and at the start, it can be very overwhelming. One thing to note to make it all easy is that you don't need to know every single altcoin in the market. You don't need to memorize their use case. You don't need to understand every single coin in the market, because at that point, it's diminishing returns on what you really should be understanding. As long as you have a grasp on the most popular cryptocurrencies and the ones that you are personally investing into, it's actually better for you to ignore all these other projects, because a lot of the times they end up being scams and just replicas of the real deal. As we progress throughout this video, I'll share with you which cryptocurrencies are the ones worth paying attention to. For now, here are though the two most popular crypto categories that you should understand. Number one is DeFi tokens. DeFi stands for decentralized finance. These tokens here are associated with platforms that aim to replicate traditional finance systems. So anything regarding finance within the crypto market is considered to be a DeFi project. If you're ever lending, borrowing, trading, or using anything without an intermediary, it is within that umbrella. Now, the next most popular crypto category to be aware about is what retail calls Ethereum killers. Ethereum is the number 2 cryptocurrency, and there's been a ton of competitors built and designed to offer similar or improved functionalities compared to Ethereum, which focuses on being more cost efficient, faster, and reliable. Now, Ethereum is considered to be one of the most secure cryptocurrencies, but it definitely has work it needs to do in terms of the speed and cost efficiency. I remember one time I was transferring ETH when everyone was using ETH, so the network cost went up, and whenever you use ETH, that transaction fee is called your gas fee. Similar to how if you're driving a car, you got to put gas into it. That's basically what Ethereum's like. In order for it to run, you pay a gas fee, which gets sent out to people all around the world who allow Ethereum to run. Now, the thing is, when the network is really congested, like everyone wants to use Ethereum that night, there's a big crypto coming out, there's a new NFT, which we'll talk about later, dropping, we'll see gas prices actually fluctuate. And there was a time where for my Ethereum, a few years back, I paid over $1,000 to process just one transaction. Through examples like that, there were other cryptocurrencies like Solana and Cardano who mainly focused on prioritizing the speed and also the cost efficiency issues that we saw happen with Ethereum. Now, we talked about how the different layers improve upon one another and enhance its performance. Well, this is where other layer 2 cryptocurrencies allowed for the improvement of Ethereum. All right, so now that we understand the different layers within crypto and you understand two of the most popular categories, let me take you through a little time journey from when Bitcoin started its inception from 2009 going into present day today. So when Bitcoin released, there was a narrative of it being digital gold. You can buy in early, and the ones who did came out very wealthy. Now, what's interesting is this narrative's been persistent throughout all crypto cycles and still remains a fundamental basis for Bitcoin's value proposition, especially during times of economic uncertainty or even when the bull market comes to an end and we're in a bear market. Following that, we had the 2017 ICO boom. Now, if you know anything about stocks, when a new company decides they want to go public and allow other investors from all around the world invest into their stock, it means that they're doing an IPO, an initial public offering. Well, crypto picked up on something similar, and they did something called an initial coin offering, or an ICO, where this was one of the most explosive narratives early on in the crypto space. This here was fueled by the rise of popularity we saw from Ethereum back in its early days. It was during this time where there was more project developers coming into the space, and they realized they can easily create new projects, new tokens, and if they're able to raise funds by issuing their own tokens, they'd see a lot of growth. So this period was marked by huge speculation as investors hoped to find the next big project, similar to the returns of what we had seen Ethereum hit at that time. So in the first quarter of 2017, Ethereum was still at $10 to $40, and at its peak going into January of 2018, it hit $1,158 per token. Now, the ICO era was insane. Although there were people who were making a lot of money off a token project initially launching, this also led to many scams and projects failing to deliver, resulting in more regulatory crackdown for the start of the crypto market. Now, following the ICO boom, just a short 1 year later, the focus shifted towards the utility of platforms instead. This is where the use case of smart contracts came about. Ethereum at this point was still the center of the narrative, promoting a future where decentralized autonomous organizations, also known as DAOs, could run applications without any central authority. So a lot of these crypto projects are getting made. They're following the traditional blockchain protocol of being decentralized. Well, who makes the decisions? Well, this would happen in the form of a DAO. The more tokens you own for a specific project, the more you can be involved in knowing how to pave the way for that project. So the people who own the token could vote on different proposals. And this is where those decentralized autonomous organizations were created. Now, this was also a time where we saw smart contracts getting introduced even more. Now, smart contracts are literally what they sound like. It's just digital contracts, and when a certain condition is met, something would execute. To build these smart contracts, you just put in a line of code, and this here was the start of allowing us to see even more different DeFi protocols, where 2 years later, in 2020, we saw something called DeFi Summer play out. DeFi Summer was characterized to be one of the most crazy times because you could earn absurd amount of interest for the first time when you were buying certain cryptos, staking certain cryptos, trading it, lending it out to people, and getting money back. This narrative here showed the potential use case of what blockchain could be made for. And even now, it seems like the blockchain technology that fuels all of crypto was best implemented and used in financial services. DeFi Summer also occurred during the time where the entire world was on a lockdown because of the pandemic. It was around this time where we finally signaled a new era in which other people could have access to different financial services. Right after that, in 2021, this is where NFTs first came about. I still remember this as if it was yesterday. The whole world was locked down. Nobody had heard about NFTs at this point. And this narrative revolved around digital ownership and tokenization of different unique assets through blockchain technology. We'll go into what NFTs are, some of the ways that you guys can play these NFTs in this upcoming cycle, but just know that after DeFi was when NFTs really came about. It's when we began to hear about it, see it on Jimmy Kimmel's Saturday Night Live show, and it's where we saw the birth of things like Cyberpunks or Bored Ape Yacht Club, where eventually these NFTs, you could have bought it for less than $1,000, ended up going over $200,000, $300,000 or more during the peak of that last cycle. That then segued into 2021 and 2022. And at that time, it was all about investing into the Ethereum killers. So at this point, Ethereum continued to struggle with high gas fees and network congestions. Later on, Ethereum had a whole bunch of upgrades, so they were able to reduce the gas fees, make it more efficient. But during the early days of Ethereum, it was still so difficult to use. Those Ethereum killers came about, they solved a lot of the issues. And if you take a look at Solana, Cardano, or even Avalanche, that massive peak you saw in the previous cycle was around the peak of when these narratives were taking off. After the hype behind that whole pump started to die down, the Web3 narrative really took fold. Now, by definition, Web3 is just a decentralized internet where users now have control over their own identities, data, and transactions without relying on other traditional tech giants. This narrative even now continues to gain traction, and it holds the umbrella for many other narratives. This includes real-world assets, where we're turning real-world stuff, gold, commodities, precious metals, and putting it onto the blockchain. This encompasses all the other narratives that are now relevant today, which include real-world assets, DPIN, decentralized social media, also known as DeSo, the base narrative, the Bitcoin ordinals narrative, the AI narrative, and more. Between the timeline of what I mentioned, there were bull cycles, there were bear markets where it lasted a few years in between. Keep in mind, narratives are also always changing, and the project tokens that do well inside of those narratives are changing too. This is why on this channel here, every few weeks, I make an update on what I believe is the current day best narrative in altcoins that I see an opportunity in. To highlight, here are some of the biggest winners that I've mentioned publicly on this channel many times. As an example, Aerodrome, we bought in at 10 to 20 cents. It went up about 1,500%. I made over $1 million from this single trade. Degen, this is a meme coin, but with utility. We're backed as liquidity for several other projects. We bought in at less than a cent, sold it for less than 6 cents for a profit of over 400%. Arkham, this is a privacy research tool token. We bought this at around 40 to 60 cents and sold it at over $2.50 for a 500% return. The common theme that you'll see behind some of the most successful trades that I've made is that we were able to spot the development of some of these narratives early on, place our bets, buy into those tokens, and then let it ride. All right, so from here on out, we've covered a lot of the basics, and you should now at least have a better understanding of the fundamentals, but This here is where the real value comes in. If you made it to this part of the video, be sure to clear any distractions. Pay attention to this section here. It's in this part I'm now going to go over how you can become an expert investor through a lot of the key life lessons I've learned from being in multiple cycles. I'm now going to go over step by step on how you can research and find those next aerodrome or Arkham plays that we got into. And not only that, I'm going to walk you through how you can actually buy a crypto, because a lot of the times if you have something like Coinbase, a centralized exchange, these plays that we buy in very early on may not be available there. So you'd have to use something called a decentralized exchange. There's a lot more steps. You got to create a wallet, but I'll go over exactly the best wallets, the most secure wallets, and how to do this in the most efficient way. From here, I'm going to go over how you can build your market edge with my personal tips of everything I've learned. I'll share with you then my favorite resources. Most of them are free. Some of them are paid. It's entirely up to you on what you want to use, but these are the ones that have helped me to make millions of dollars in the market. It saves a ton of time and it gives you access to resources that you never would have had. From here, we're going to go over all the scams that you're going to encounter on your journey of making a ton of money within crypto, and I'll go over how you can combat all of them by beefing up your security. And from here, you should now be on your way of getting closer to crushing this market. Now, with all that said, here is what you need to do before you decide to invest any more money into the market. The number one principle and the question you need to ask yourself is, what is my risk and what am I comfortable losing? Far too often, I see the bull market pick up or many people deciding they just want to go all in on crypto without thinking twice about the money that they could lose. Now, look, everyone's going to have a different situation. You watching this video, you might be a parent, you might have a few kids, and you might not be in the best financial situation in order to risk tens of thousands of dollars. Now, on the other hand, you're a high school kid. You have all your bills paid for, you have a roof over your head, you have a couple $1,000s from birthday money, Christmas gifts and whatnot. You're going to have a higher risk tolerance than someone who has a family where they're constantly paying the bills and worrying about the funds because it could affect the livelihood of themselves and their kids. So first things first, analyze your own risk. Understand how much money is coming in, understand the expenses that are going out, and put in the market only what you are okay with losing. This is because I've seen situations where people take out a loan from a family member or a friend, or they get like a line of credit and max out their credit cards in order to invest into the market. And the market could be very unexpected where it ends up going down for a few months before it breaks new all-time highs again. And you're going to be sweating, emotional, and stressed out for the fact that you over leveraged yourself and you didn't do a proper risk assessment. Now, my income today is completely different from where my income was back when I was a college student. Back when I was a college student, I'd probably invest less than 50% of what I had into the market, understanding also that I was still newer to the market and that I would learn over time. It's only through hindsight where you tell yourself, oh man, if I invested into that specific coin at that time and just rode it all the way up, it would end up becoming a massive amount. Just know, as the market continues to mature, the inflation isn't just happening between the dollars that we spend in everyday life, but it's also happening with the amount of projects that are coming up. Where in the last cycle, maybe we'd have 100 projects in a day getting released, but in the bull market now, going into 2024 and beyond, there's probably 500 or even 1,000 new projects getting launched every single day. This means there's going to be more projects that go to zero than the projects that do what Bitcoin and Ethereum did over the long run. Now, what I encourage all my members in Kaizen, which is my private membership group, to do is, as soon as you join, set a goal on the amount of money that you want to make. This is because a lot of the people who get into the space, they have a reasonable amount that they want to make. Maybe they want to just double or triple their money. When the market really picks up, bull run comes around, and you hit that amount, a lot of the times people then lose sight of why they were investing into the first place. The goal of, oh, I just want to make an extra $30,000 so I can pay off my car debt or buy this new thing or put a down payment to this house, ends up being, oh, maybe I can buy 2-3 cars now. Or maybe now I can buy a multi-million-dollar mansion, which I never thought of before. When things get crazy in crypto, and this will happen again, everyone loses sight of their initial goal. They start making their targets even higher, and they get to a point where they continue getting greedy, setting those sights higher. And at some point, when the market goes down, they end up losing it all. Now, you can set a broad financial goal of, I want to make this much in the market, I'm willing to risk this much, but it's only something that you can do. So I highly recommend either pausing this video now or at the end of this video, taking those notes and reflecting upon how much money you're willing to risk and what that goal amount you want to make is. At the same time, be realistic. If you risk only $1,000, the chances of you making $10 to $100 million is going to be in the single digits. Now, with all that said, The most important aspect that you have to focus first within crypto is understanding where we are in the market cycle. So we have the bull run and we have the bear run. Bull is when everything is going up. Bear is when everything is getting crushed. Now, in a bear market, aside from stable coins, every single altcoin, even Bitcoin, will go down dramatically. Taking a look at history, every moment we've had an incredible bull run has been followed by a period of a bear run. Now, these bear cycles can last a few years. It can be very brutal. And if you invested more money than you could have afforded to lose, and it was all locked up in crypto, those few years are going to feel like decades. Now, the reason it's important to understand where we are in the cycle is because you're going to want to trade differently according to the cycle stage. So as an example, during a bear market, what I like to do is accumulate Bitcoin. After the bull run comes to an end, which is usually when Bitcoin hits the peak and it just continues to go down and down and down and down, that's where I don't do anything. So leading up to a bull run, you don't need to always invest into the altcoins right before it takes off. Timing the market is very difficult. Even the pros are not able to do it, but you can still play both sides to the market. What this means is if the market goes down, you can make money. If the market goes up, you can make a lot more money. What I personally like to do is trade with momentum behind on my side. So when we're in the bear market, I will accumulate more Bitcoin. It's around these seasons where you can buy Bitcoin. It's the safest asset within crypto because you just don't know how low things will go in a true bear market with some of these other altcoins. When I accumulate that Bitcoin and we see some growth, I might experience 30, 40, 50% gains leading into the next bull run. But one thing is clear, when we are in a bull run, everything goes up and we experience what we call altcoin season. The path to altcoin season is played out a ton of different times. There are a few adjustments that we're seeing now that we're progressing into more of these mature cycles, but generally we see money all going back into Bitcoin. It all leaves altcoins. Everyone wants to sell their altcoin. They want to run for the hills when Bitcoin starts going down. And then when the cycle starts again, going from a bear to another bull market, we see money going from Bitcoin, then going back into Ethereum's, then going into all the other altcoins. So how do you position this? Well, when things go down, buy up Bitcoin. But when things start to pick back up and you get signs that the bull market is on, this year isn't financial advice, but what I personally do is I sell all my Bitcoin. As an example, Bitcoin is still at such a high market cap. There would need to be a lot of money for you to make a 2 to 3x with this coin. I swapped about $120,000 of cash mixed with all the Bitcoin that I had into Aerodrome back when it was at 10 to 20 cents because this was a high conviction play. And when this had hit over $2, I had seen that same amount make me over $1.5 million. If I had held that money into Bitcoin, I would have gotten maybe a 60 to 80% return. But because I knew how to position myself into the altcoin season, that's where I was able to make a 15x that allowed me to make millions just by knowing where we were in the cycle. So understanding the importance of the cycles, we have to then ask ourselves, well, what's the root cause? What causes a bull run to start? What causes a bear market to start? And how do I know what may happen next? So one might assume that the crypto markets would be divergent of how they perform compared to the stock market because they're two different asset classes. But what's interesting is that Bitcoin follows the price action very similarly to what the S&P 500 and the broader US stock market does. So anytime the S&P 500 goes down, if there's a stock market crash, we see Bitcoin also going down. The S&P 500 also performs based on how the economy is doing, where the inflation is, and also where the interest rate lies. So this is where that guy, the name you heard of, Jerome Powell, comes into play. He is the individual who makes the decision on whether or not we get something called an interest rate cut. So if you were to go out and buy a house right now, the interest rate is about 7% at the time of filming this video. What that means is if you're able to secure an interest rate of 2% on a mortgage, you may be paying just $3,000 to $5,000 a month for that mortgage. But when that interest rate near doubles to triples, that mortgage of $2,000 to $5,000 ends up being $5,000 to $10,000 you pay per month. When interest rates are high, people don't want to get cars. People don't want to get mortgages because you have to pay even more every single month to the banks in those interest rates. The government does this now to slow down the spending. If we kept on spending money, we get something called inflation rising up. Now, this talks of inflation, all of it started ever since the pandemic and when we actually dropped all that stimulus money, which equated to about $2.3 trillion in spend. That $2.3 trillion of excess money going into the markets has now been affecting us even to this day. So the performance of Bitcoin lies within how well the economy decides to perform where interest rates are, how bad inflation is, and if the markets are resilient enough and stocks and S&P 500 continue to go up and we get news that inflation is under control, I'd expect for us to continue this bull run. Now, historically, bull runs have lasted anywhere from 18 months after every event known as the Bitcoin halving. Now, the Bitcoin halving does not affect the amount of Bitcoin in circulation. Instead, it affects the amount of Bitcoin that gets mined. So every 4 years on the halving day, the amount of new Bitcoins created gets cut in half. This means that when Bitcoin halves, the reward given to the contributors securing the network is reduced by 50%. At the beginning of 2020, we saw 12.5 new Bitcoins were added to the network every 10 minutes via virtual mining. In May, this was cut to 6.25, and in April of 2024, it dropped down to 3.125. The way the price action of crypto moves up is the fact that you just get higher demand for the amount of supply there is. The more people that buy up an asset, the higher the token price goes up. Now, going into the example of Bitcoin, we will always have an amount getting mined from Bitcoin that opens up the supply, but that supply gets cut lower and lower every time we have the Bitcoin halving event. And if the demand continues to rise up where everyone wants to buy into Bitcoin, that's when we see the price of it increase. Now, how do you know when to spot the top of the market? Well, this is where we use indicators like the Crypto Fear and Greed Index. It's something very similar, but it measures a variety of different factors, including how fast Bitcoin's price action is moving up, how many people are talking about the asset, how many people are trying to just buy in at a time where it may not seem right. And it's usually after we get this euphoric peak in the market where things begin to come back down. If you've been investing for at any point in time, you would probably come across this Wall Street cheat sheet of a psychology of a market cycle. This follows very similarly to what crypto has done. In the beginning of a rally, a lot of people are going to be in disbelief. When Bitcoin was at $16,000, everyone was expecting for it to drop at $12,000, and that's when people would buy. But to many people's surprise, it actually continued to rally up. This is where we begin to see hope, from $16,000 of Bitcoin going into $20,000. From hope, we see over time, many months go by, continuing to go up, we see optimism. It was from optimism, we then saw belief, thrill, euphoria, and it's usually around this time, this euphoric peak where everyone, you could feel that greed. They're just coming in, they want to buy the asset no matter what. You go to work, people who never invest in your work area, who know nothing about crypto, are asking you if they should be buying into Dogecoin and some of these other meme coins. That's usually an indicator we get to something called the market top. Now, your goal is to always buy in early enough. I don't say that you need to time the market, buy in at disbelief, or even buy in at hope. But if you can buy in even right around this optimism stage, as long as you know how to sell and not get too greedy, you can still make a great profit. I talked about earlier how I prefer to momentum trade. So this is where I know I get confirmation. Yes, we are in a bull run, because once that is established, we get many, many months following that. And that is where I can still find plays of projects that just released that did not exist for many months ago that I have access to, and then I buy in early. Now, we'll talk about shortly though the dangers of that as well, because the thing about crypto is even if you buy in as the first investor, first mover's advantage isn't always the best if you buy into a project that comes out, that releases and had a ton of private sales in the back end, where a lot of the times where we get something called a TGE, a token gated event, where it's the first time they launch their token. A lot of those previous investors who bought in way before it got launched will go ahead and sell their bags on retail just like us. Now, the great thing about crypto is we talked about blockchain, we talked about transparency, how everything is available on the internet. Well, we can go ahead and see and ensure that this isn't going to happen. This here is by looking at tokenomics, looking at the private sale investors, and I'll go over some of the best tools that you can use in order to protect yourself from getting dumped on. Back in the 2021 bull run, this here was an example of a project that had a crazy hype launch. Everyone thought it was going to go to $1,000 per token. It came out at $420. I even bought when it came out, and look at just how badly this crypto ICP here got nuked. This is an example of private investors who bought in before the token launched and selling off their bags and making people lose tremendous amounts of money. Now, I've learned my lesson, and I'm glad that you guys don't need to do it. So I'll go over exactly what you need to understand in order to protect yourself moving forward. Now, with that said, when you're buying a project early enough, it's going to be a completely different vibe or feeling of what it's like when you're buying a project that's already lifting. When I bought into Aerodrome back when it was at 10 to 20 cents, I noticed that on Twitter, which is where crypto lives on, no one was really talking about it. It was a narrative that hadn't picked up yet, but I saw the potential in. Now, here's the thing. Your goal is to not always buy in as early as possible because you do have the most amount of risk, and everything is hindsight when you look beyond the time of when you bought in thinking, oh, that was the right play. I should have bought more money. So here are some of the biggest lessons that I've learned. Number one, do not ever FOMO. Do not buy something just because it is going up. In a true bull market, you will have missed opportunities. There are going to be 14-year-old degenerates that turned a $100 portfolio into even $100,000 or even a couple $1,000,000, and you'll see a ton of these threads in the peak of that bull run. That's actually how you know you're in the middle of a bull run. It's when those threads always pop up of how I made $1 million, how I made $1 million. In a bear market, you're not seeing any of that. When you see that, a lot of the times these accounts are going to say, oh, these are the next projects though that I see coming up. Be careful, because a lot of the times those threads are first of all fake, and they're a way for you to buy into some of these other projects that have zero chance of success. Now, yes, there are legitimate threads, but when it comes to the world of crypto, there are many times where people will get paid under the table without properly disclosing that they were. It's one of the reasons why I believe we've been so successful on this channel here, and it's because I value transparency above anything else. If a company ever wants to work with me, put my name on anything, or I decide this is a valuable company, I make it extremely clear that there is a paid interest here happening. Now, at the time of filming this video though, luckily there has been no project that has ever been able to pay for a spot in any one of my YouTube videos, and everything I buy is on the public market, just as you guys do. Now, the lesson here is during the bull run, you're gonna hear so many people making money. People are posting their highlights, their wins, but a lot of the times they're not gonna share the full story on the hundreds of thousands of dollars that they lost, all the missed trades that they had. And just like how social media really is currently, just a highlight reel of your best angles and you doing the most fun stuff, and it never shares the full reality of what people and humans deal with, you're gonna experience that even alongside the crypto markets. So don't FOMO into anything. Don't have this fear of missing out. And the way to properly steer away from this is that anytime you decide to buy a crypto, you need to have a clear why. Why are you buying it at this price? And what I like to do is open up something called a trading journal, where I just open up in the notes section. I put something very simple. I even write it down in some of my other notebooks, what I'm thinking, so that I am clear on any of the distractions and that I'm not making a decision based on the fear of missing out. And if there is a bit of FOMO, it's okay. It's crypto. Everyone's going to get it at some point, but then make sure that you're properly leveraging the amount of risk you put into that trade. In the last few months, we've made a couple $1,000,000, but there were some trades that I definitely could have been more patient on. When I started putting $100,000 plus into meme coins that I knew I could be quick on, but I didn't sell for a variety of different reasons, I realized that I still became a victim of FOMO, even with me having the experience of all these different market cycles. Another way to combat this is to make sure that you surround yourself with a good community. If you're putting yourself in group chats with friends who are constantly egging each other on or telling you to do this or do that, and sharing wins of things that are high risk, and they only highlight that one trade and not their 5 losses either, that's probably not the best community to be around. This is where we create a Kaizen. It's one of the top crypto communities right now, and it's where now we have members who are helping each other stay accountable, and even our moderators making sure people aren't acting out of emotion. Now, I mentioned this earlier, but a big top signal that I look out for is seeing how often I hear about crypto in person. When it comes to navigating these markets, there are going to be people who analyze their charts. This here is called technical analysis, where they're constantly looking at chart patterns, trying to see when the next opening is. They'll use different tools and indicators and moving averages. And for people who prefer that method of trading, it can work. But I've realized that if you are able to use a variety of different tools, understand the fundamentals and the narratives coming up, I believe having a combination or skill set in both can help you to become the best trader in this market. Personally, for me, I never use technical analysis, but I will now use it in order to time some better entries on certain projects. I still believe fundamental narrative investing during the times where the market has a confirmation everything is going up is going to give you the highest chances of success. On the other hand, though, there's going to be some more degenerate type of crypto investing. People can use something called leverage, where if you don't have $10,000 of access, you can borrow $10,000 as if it was a loan to you to increase your buying power on some of these other projects. Now, anytime you're borrowing money, like I mentioned, you're putting yourself at incredible risk. So this is where you need to practice and really understand different tools like stop losses so that if something actually goes down when you thought it was going up, you protect yourself, the asset will sell so that you avoid placing yourself in further debt. We'll go over into more detail on who leverage trading is even best meant for, because there are a lot of people that should never even touch such a tool. Another thing to look out for is when it comes to crypto, when there are no more exciting events coming up, that is also an indicator the market is either going to be flat or the top is near to. An example, Bitcoin halving. We all know it takes place every 4 years. The market tends to rally around that time. But if that's already happened and there's no event that you can think of, no upgrade, no releases, no government regulation, no more ETFs.
What's up with you, bro?
Terrible. It was good, then it was bad.
What happened?
Lost fucking 0.25 off of Billy.
Billy.
Mm-hmm. It was consolidating for a while. It was coiling up a lot like Matrix yesterday, and I was like, yeah, it's about to boom, and then it just bled out. But now it's at 2 mil, bro. Like,
yeah, you talking Billy? That's at 2.2 all-time high.
yeah, bro. It was consolidating at like 1 mil, just coiling up a lot like Matrix was, and then it just went down to 500K.
And then you sold.
Yeah, it's been about an hour since then, so.
Bro, you gotta trust the bags on these things a little harder, bro.
I don't know. It was funky.
I get you, bro. I be getting out early sometimes too, bro.
But it's okay. Like, I'm still up. It's nothing I put in and like lost, you know? Like,
Nah, I feel
it
you.
was money I'd made and that I made today. I felt good about it, but it went south. It's all good though.
But I haven't been catching nothing, bro. I've been like real dry. I'm not gonna lie. I've been looking at old coins.
Yeah, that's all that's showing up. Like, it's moving at all. Like Billy's not old, but all the coins from yesterday is still showing up. Like, there's nothing of value. But good news is Solana's up, so maybe we'll see some volume this week.
Yeah, bro. I've been looking at some Mev plays. I know I shouldn't, but I have.
Hey man, sometimes maybe good, sometimes maybe shit.
Well, now he just pulled one pretty quick. Let me see how long it lasted. Like 30 minutes, if that.
I've seen him rug at 8. That's 30 minutes is
7 minutes. Nah, but he's running like a slower one, so it went from 9 mil to max 13 mil, which isn't shit. And then it rugged in 30. Usually he'd run those for like an hour.
yeah.
I wasn't a part of that one, thank God.
ETFs, it could be harder for us to see the market rally. This is because what usually happens is we see a case of buy the rumor, sell the news. As an example, approaching the Bitcoin halving, every single time we see Bitcoin moving up, knowing that the halving is coming up, and towards the halving date, we see everything sell off. What a lot of investors will do is they'll buy in knowing that some news will come up, and when that news actually occurs, they sell off. Take as an example Dogecoin. In the 2021 bull cycle, everyone was shouting that Dogecoin needed to hit $1 because Elon Musk was talking about it on SNL. Everyone and their mothers, they were investing on every platform possible, and people were expecting a $1 Dogecoin. It never happened. It sold off right before then, and we've seen this take place time in and time out. So buy the rumor, sell the news. I see this happening in crypto far too often. People will buy into something going on and they will sell right before the peak. Now, say you positioned yourself well. You bought in early enough. You bought into these altcoins that didn't have a pump. You're up 3 to 5x. Well, what do you do then? This here is where your exit strategy principle comes into play. And there's a ton of different ways that you can enact different exit strategies. You can set price targets. You could set up a calendar notification. I will sell at, 60 days from now. Or you could DCA out, which means dollar cost averaging out the similar way as if you were to dollar cost average in. This simply means instead of just buying the crypto all at once, you just buy in small clumps at an extended period of time. Now, it's really hard to time the market. So if you buy out slowly towards what you think is the top of the market, you've already made 2 to 3 to 5x. That's one way that you can also secure those profits in the case that it just starts to come crashing down. In the peak of the bull market, market though, keep in mind, by selling too early, you could be losing even more gains than if you were to sell just a little too late. So this really just depends on what your entry was and how much you're already up by. Say I have a whole bunch of cryptos. I got 20 or 30 of them and I have equally high conviction in all of them that they're going to go up. Well, what do I decide to buy in? It comes down to their tokenomics. So who owns the supply? Is the supply coming out at a rapid pace where if nobody buys and supply keeps going up, the price of the token is going to go down? Does a whole bunch of VC own it and they're going to be able to sell and unlock and dump their tokens a month after it launches? Or I like to look at market cap. If there's a token that's already expanded, it's at $1 billion market cap, it's going to take a lot more money for $1 billion market cap to double once more, rather than if I bought into a crypto with the same conviction at $100 million or $10 million market cap. Now, by definition, a market cap is the total dollar value of all the shares of a company's stock, or in the case of Bitcoin or any other cryptocurrencies, it's all the coins that have been mined or released, and the market cap is just calculated by multiplying all the total number of coins that have been released at a single given time. This here is a method of value investing into crypto. So if cryptocurrency A has 400,000 coins in circulation and each coin is worth $1, the market cap, it's 400,000. Now, if cryptocurrency B has only 100,000 coins in circulation, but each coin is now worth $2, its market cap is $200,000. Even though the individual coin price of crypto B is higher than crypto A's overall value is actually double than cryptocurrency B. So similar to the stock market, if you've ever heard of a stock split, this is a similar concept that we have happening within crypto. Basically, in the stock market, when a company has grown tremendously, a lot of new investors are not going to want to invest into an Amazon that costs $40,000 per share. But if they do a stock split and they make it look cheaper than it actually is, it's going to want more retail to buy. So in the case of crypto, you're going to see a ton of different price action. Some will say it's at 12 cents. Others will say it's at $7. And people who are really new to the market, they're just going to buy into a crypto that's at 15 cents thinking, oh, it can probably go to Bitcoin's market cap of $65,000. This is the true retail way of thinking, and you got to be careful. Every crypto before launch is able to determine what this price is going to be by just adjusting their supply. So the more supply they have, as an example, Doge has 144 billion supply in circulation for this token. They're able to make the price look like it's 15 cents. Now, on the other hand, Binance, their circulation supply, or the amount of Binance tokens that are revolving, it's only 147 million Binance tokens. So you can see lowering the supply during the development of a crypto project will impact the price here. This is where I look at market cap and I compare market cap size to see which crypto is going to have more value and more potential for growth. Now, with all that said, understand this: when it comes to crypto, there are going to be even more cycles happening underneath the broader Bitcoin bull run. We've seen different sectors pump at different times. Sometimes one sector pumps, it leads to another sector pumping, and you just want to go ahead and be one step early. You don't need to be 5 to 10 steps early, buy in months ago, but just if you're early in, even just a few days early, or even if you're a few days late and the pump ends up going for months, that's where you still are able to make that money. So how do you find these cryptos? Where does the research even start? Well, I like using something like coinmarketcap.com or CoinGecko. This is all personal preference. They do the same thing, and it tells you what the broader crypto market cap is sitting at. It'll tell you some of the trending coins, the largest gainers, but most importantly, you'll be able to see a lot of these different projects. Now, when a new crypto token is released, you can either buy it on a centralized exchange or a decentralized exchange. A centralized exchange is an example like Coinbase. Scrolling down, you could see a whole bunch of exchanges that you could buy Bitcoin on. Now, Bitcoin is the #1 crypto. It's going to be available on every exchange possible, and you'll see a whole bunch of them. Now, every exchange is different. I actually categorize my exchanges by tiers. Tier 1 exchange is something like Coinbase. They have a ton of volume, meaning a lot of people are using it, they're trading it, it's backed, it's really reputable. And then there are going to be new exchanges that someone makes with a group of people. It just came out a few days ago. There's no volume, no liquidity, and it could be at high risk. When a project is on a tier 1 exchange like Coinbase, it usually means the project is vetted in a certain way. It's very rare that Coinbase, Binance, or any one of these tier 1 exchanges are going to go ahead and list a complete scam project on their site. Coinbase got sued as a company because they were listing random projects at one, and there was a lot of inside information because when a project did get listed on Coinbase Exchange for the first time, it would get something called the Coinbase effect or the Coinbase pump, where it just naturally starts going up. So to begin navigating the crypto markets, obviously just watching more videos like this is going to help. I do episodes every few weeks going over some of the top altcoins and the narratives that I see forming, but you can also just go ahead and click around on different categories. We talked about in the beginning of this video all the different categories that exist. Now, CoinMarketCap is going to create some categories that really I don't think should exist, like the jobs tokens and the pre-sale memes. Some of this stuff I would definitely steer clear of, but you'll notice a few trending narratives too. AI is a big narrative. Gaming, not so bullish on it. A lot of scam, pump and dumps from different influencers here. But this is another market where there's a variety of different projects. A website like this is where you're gonna see a lot of crypto projects, but keep in mind, if there's a new project, they need to apply on CoinMarketCap in order to get approved. That's why you see this get listed here. If you're a project founder, you can go ahead, submit it, and then they'll go ahead and show on their site. Now, the thing about crypto is anyone can make a project. There is ChatGPT tools, AI tools, where you can create a meme coin in less than a day as a beginner. A lot of the time, someone who makes a project has the most amount invested into it because they can get into it first. They know the tokenomics, they know the supply, they know how it's going to release. And this is where if you see a new project coming out, it's not always wise to just buy in because you see it trending. A lot of the times though, if there is a crypto project, it's good and it just released, you've done all the vetting and you don't see it on CoinMarketCap, it will probably be on the alternative site CoinGecko. Now, if it's not on a centralized exchange and it's on a decentralized exchange instead, you're going to use a tool called DEX Screener in order to find it. So right now already we're seeing a whole bunch of random tokens, Ninja Cat, Binance Cat, Snowboard Cat. A lot of people right now, the trend is to make new meme coins on Solana. They'll list it on DEX Screener because it won't get listed on a centralized exchange. It definitely won't get listed on something like Coinbase where they have a reputation of listing only legitimate projects. Then that means you would have to go on a site like DEX Screener in order to find some of these other projects. Now, this is where a lot of the high risk projects live, but you can still see the basics. Market cap, seeing how much a crypto project is worth. Liquidity here, this is the amount of crypto volume getting traded. So if I bought into Pumpcat today, it's already up 21,000%. And by the way, don't get baited into a lot of these. They can release these tokens, make it start out really low, but by the time they get listed, they can manipulate these numbers to make it seem like it's up 21,000%. But early on, if no one is selling, and people are just buying in, you do not get the best price. What also happens is when there's very low liquidity, you are not able to put in a big bag. So most people who are buying this right now, they're only putting $100, $1, $160. But if this was really going to the moon, someone would want to put $1,000, maybe more, but you just can't. You'd have to spread out your buys because the liquidity is so low. And in order for you to buy a crypto, someone needs to sell it. So that is the exchange that is happening. If no one is selling their crypto, you're not going to be able to buy a crypto and you're going to have to break up your orders. Otherwise, you're going to pay a huge premium on that token. Now, going through CoinGecko, CoinMarketCap, and even DEX Screener to find some of the next potential plays is a decent starting point, but there are a lot more tools to help you get started and to then build what we call your market edge. The market edge is just finding a winning formula for yourself that allows you to consistently get wins or increase the probability of you finding some of the projects that end up taking off. Now, the first free tool that you can use in order to begin your research is going to be Twitter. Crypto mainly lives on Twitter. That's why crypto Twitter is a whole saying. You have all the influencers there and you get all the new projects when they release. That's where they come out with all the information. Instead of going on Wall Street Journal, CNN, or whatever website that you use for your news, crypto Twitter is where you'll find the most updated real-time info. Now, how do you even use Twitter in order to find some of the best projects? Well, the one thing you have to do is optimize your Twitter feed. What I've done is follow some of the most prominent crypto Twitter influencers within the space. I follow a lot of projects, and from there, the Twitter algorithm will begin to show me these different projects, and I start taking note. Some of these projects that I see pop up, I look it up. I see if it's released or not, maybe it didn't, and then I'll see whether or not the price of it does better in the future. It's from here where you start building out what you call a watch list, because it's very rare where if you see the first thing that pops up on your Twitter feed on a new project that you just immediately buy in. If you do that, you're gonna get wrecked at some point because a lot of the info, even on Twitter, like I mentioned, is paid for. And if it's paid for, usually there's an intended target for people to sell to. So to make it easy, you guys can follow me on Twitter and just go through some of the accounts that I'm following so that you can at least shape your algorithm to look similar to mine. The next thing is, if there's a certain crypto that I found a ton of value in or that I saw going up, I'll look it up. So I did the ticker sign Arrow. This stands for Aerodrome. And I'll try and find some of the other people that may be talking about Arrow. I'll see different accounts. I'll see if they're mentioning any other projects. And it's from here you can begin your research. Now, you can go down a rabbit hole. There are some really good threads. Not everything is paid for, and you can find value. Just make sure with the research that you do, you end up following through till the end. And I'll share with you exactly what the precautionary steps before you buy into a project should look like. Another place that you guys can get inspiration from is obviously YouTube. I do all the research for you. I've been doing this for years. We've already found many, many gems that have taken off. And I talk about those exact projects in my YouTube video. I go over exactly what it is, just so any beginner can understand the value and why I decided to buy. Now, please just be careful of other channels you'll see. Once you watch one of our videos, you're gonna see on the suggested column or even on your browse feed, all these other YouTubers with the gaping mouth, with all the rainbow colors and saying Bitcoin's crashing or the next pump or the next 100x this and that. Just know that there are a lot of scammers, grifters, and people in the space that will shill you something where they bought in on the private market before anyone was able to buy on the public market, like on the Coinbase exchange or on a decentralized exchange, and they will dump on you. A good and easy way to do this vetting is look up whoever comes up on your feed and search them on Twitter or on Google and type the word scam or scammer. See all the threads that come up, because in YouTube, I'd say about 99% of other channels, not to diss any of them, there's a clear abundant amount of scammers in the space that have a reputation of scamming others, and they continue to do it to just dump on people like yourselves who are getting into this space for the first time. Now, I'd say out of all of that, you can use Reddit, you can use different
Well, that's your MevBot play.
Yeah, I made 15% on it, but it was such a small bet. It doesn't even matter.
The Timu.
Yeah, I made 15, but fuck it. It ain't shit.
Nah, I mean, the most you're gonna do is maybe a 2x on it if you leave it in that long and you get lucky.
Yeah, bro, but it's not even worth that. Like staying in, like risking it that long.
Fuck no.
I would say like a cool 25% would be chill, bro. But I already took out my initials. I mean, I just left a little fucking something just because I don't care. I just want to see how high it goes.
The biggest mistakes that meme coin investors make. Now, you might have seen my last video where I spoke about T-Mania, Make America Great Again, RNT, Pepe Coin, and some of the biggest crypto investments I am making. Well, if not, you should subscribe to this channel and check the video out after this, because I'm going to save you a lot of money right now. I'm going to show you exactly how you can go from this type of person who doesn't know what they're doing, right? Apes into all these different meme coins, and for some reason never makes any money, or never makes the money which they wanted to make, which they came into it, which is, I presume, tens of thousands, hundreds of thousands, millions of dollars, and just increasing that bag of Solana, right? Maybe you never caught
Damn,
Daddy
I'm looking
coin,
at this
right? Maybe you never caught all of
NeoCat
these
coin.
different coins, right? Or
Yeah,
this guy,
estimated
right?
price average is freaking 84K, but it's all the way down to 56K. It's falling hard.
What coin? What was it?
The EMA on this coin is 84K, but the coin has fell to 53K. It fell hard.
Damn. Let me see. What's the ticker?
What's up?
What's the ticker?
NeoCat. I'll throw the thing in the. Honestly, I don't even know where to put it. I throw it in live calls. It's kind of shit. It's not a good coin to buy in on. I made a quick little reversal off of the 0.5 Fibonacci. Made like 15%. And got out. I hope nobody clicks on that and buys that.
No.
I hope people in here are smart enough not to do that.
I think it's just me and you right now.
It might be flipping around actually.
Matrix hit. I mean, you could still make a bag off that. A little.
Yeah. Volume's still okay for it.
The guy is just chilling, running up the bag, right? Making money, right? And it's just laying in it, right? If you look, right, then maybe they switch you on life. Yeah, this guy's made some good calls. No, right? Take the information, right? Use these channels as information channels, right? For example, right? You want to be in all of the groups, right? You want to be, let's see.